As one of the largest GAs in the country, Arrowhead has program management down to a science. Find formulas for success at arrowheadgrp.com/science.
Small to medium-sized organizations are just as susceptible, if not more, to internet privacy breaches, says Richard Betterley, president of Betterley Risk Consultants, an independent insurance risk management consulting firm in Sterling, Massachusetts. The problem is the small and mid-sized businesses are not as aware of the issue, nor do they have the resources to deal with the breach if it does occur. In this interview with MyNewMarkets.com associate editor Amy O'Connor, Betterley addresses how agents can tackle the challenges of selling cyber insurance products to these companies.
It's increasing, but not like we wish it were. There's a lot of publicity, a lot of headlines about cyber breaches. Generally happens with larger organizations, so the smaller organizations say, can't happen here. It wouldn't happen to us, we're not targets. And they don't seem to realize that the smaller organizations have become the targets because they're easier to breach. The agents and brokers are talking about it more. I hope enough, but it's a difficult product to understand. Most organizations are not good at managing that risk, first of all. The smaller organizations just don't have the resources. They're too busy getting product out the door. They're too busy getting customers in the door, and they just can't focus on what they see as an overhead burden, I think, and I think probably they don't really understand the risk. And so it makes it really difficult for them to manage it. I mean, they're happy to keep their system up and running. As we say, sometimes it's keep the lights blinking. That's not necessarily a sign that you've got adequate privacy security. We think that the risks in many ways are worse for the smaller enterprises, and so they're less capable of avoiding losses, and yet they're going to buy coverage at a relatively low premium. So how do we control that? I think the insurance company has to control it. First and perhaps most doable is to essentially take over and provide the services through third-party vendors, but at negotiated better prices. The victim of a breach, cyber breach, has probably never experienced it before and hopefully never will again. And they don't know what to do. So I think it helps if the insurance company can step in and say, well, here is what we think works well, and here are some vendors we have negotiated preferred pricing for our insurers. I think that's step number one. And then step number two is I think there is coming a lot from technology to help reduce the chance of a breach. A lot of cyber insurance losses are not breach, it's information loss. But for those that are technology based, encryption, stronger firewalls, those are things that can help improve the risk at relatively less cost. Whether the small insurers will buy it, that remains to be seen. There's a lot of pressure on U.S. businesses to, make a dollar, and spending it on insurance, you can always hope that it's never going to happen to you. There's an awful lot of organizations out there that have had breaches that are very well thought of organizations, and they still had a breach. So yes, it can happen to you. Need to keep pushing it. Know it's a long cycle sell. Might take 2 or 3 years. That's why I think probably the agent who has the business now is going to be the one who eventually sells this additional coverage to the insured, because it's hard for a different broker to make enough money selling that one policy to come in. If I were an agent or a broker, I'd sure want to be talking to my insureds about buying this insurance, because I'd be really nervous that some other broker will come in the door and say, what do you mean you haven't heard about this insurance? Well, if you had a good broker like me, you would. I'm not a broker, but that's what I observe.